Nationwide home prices in Australia are higher than ever. Rents are at record levels and homelessness is rising. In Sydney, the average home costs almost 14 times the annual disposable income, making it the world's second most expensive city to buy property after Hong Kong. It's not just the biggest city that's expensive. Home prices in Brisbane, Adelaide and Perth have surged between 70 and 75% over the past 5 years to reach record levels. Prices have climbed so much that it now takes the average Australian buyer around 10 years to save a 20% deposit for a medium-priced home, double what it was in 2010.
Australia has always sold itself on a simple promise: work hard, get a stable job, buy a home, build a life. And nowhere was that promise meant to be safer than Canberra, the city of steady public service careers, predictable incomes, and low unemployment. But in 2026, that promise is cracking, especially for Gen Z. And the numbers explain why. Because according to recent housing and income data, the median house price in the ACT has hovered around the mid-$900,000 range, while the median full-time income for people in their 20s sits closer to the low $70,000, creating a price-to-income gap that would have been unthinkable a generation ago. And at the same time, rental data shows Canberra consistently ranking among the most expensive rental markets in the country on a per capita income basis, with weekly rents for a standard apartment often pushing past levels that consume well over a third of a young worker's take-home pay.
The single biggest reason for the affordability crisis is that Australia hasn't been building enough homes to keep pace with its population increase. Record levels of immigration since borders reopened after COVID have laid bare the poor supply of housing. Pressures include overly complex and slow approval systems, a shortage of building materials and labour, and opposition to development by local residents, known as NIMBYism, which stands for Not in My Backyard.
And this is why a growing number of Gen Z Canberrans are quietly asking a question that would have sounded extreme just a few years ago. Is the Aussie Dream even possible here anymore? And before we go any further, if you're watching this and you live in Canberra, or you grew up believing the public service was a guaranteed pathway to stability, tap like so this conversation actually reaches the people living it. And drop a comment telling me whether you think homeownership in the ACT still feels realistic for your generation. Because the story unfolding here isn't just about property prices. It's about expectations colliding with reality in one of the country's most structured economies. And to understand why Gen Z is losing faith in the Canberra version of the Aussie Dream, you have to understand the contradiction at the heart of the city. Canberra is full of secure jobs, but those jobs no longer guarantee secure housing. And that tension has been building quietly for years, because the ACT has one of the highest concentrations of salaried professional workers in Australia, driven by the federal public service, defense, higher education, and policy consulting, sectors that historically offered stability rather than explosive pay growth. And for decades, that trade-off worked. Modest but reliable income paired with relatively affordable housing. But over the past 10 years, that balance has broken, as housing costs accelerated faster than wages, even in a city without the speculative frenzy of Sydney or Melbourne. And for Gen Z entering the workforce now, the timing couldn't be worse, because they're arriving at a moment when entry-level salaries are no longer aligned with entry-level housing. And the numbers tell that story clearly. ACT housing data shows that even unit prices, once the affordable stepping stone, have risen sharply, while wage growth for early career public servants has been restrained by enterprise bargaining caps, indexation limits, and fiscal tightening cycles, meaning the traditional Canberra pathway of start as an APS graduate, save steadily, buy modestly, has become far harder to execute. And this is why surveys and census data increasingly show younger adults in the ACT staying in shared housing longer, remaining in the private rental market well into their 30s, or living with parents at rates that are climbing year after year. And while this trend exists nationally, it hits differently in Canberra because the expectation was different. This was supposed to be the safe city, the rational city, the place where the numbers made sense. And yet for Gen Z, the math simply doesn't work the way it used to. Because when rent absorbs such a large share of income, saving for a deposit becomes slow to the point of feeling impossible. And when house prices sit many multiples above income, even conservative borrowing feels like a lifetime commitment rather than a milestone. And this is where the emotional shift begins. Because Gen Z isn't just delaying buying a home, many are actively disengaging from the idea altogether, reframing success around flexibility, mobility, or experiences rather than ownership. Not necessarily because they prefer it, but because the alternative feels unattainable. And Canberra's rental market plays a huge role in this mindset. Because unlike larger cities with sprawling outer suburbs, Canberra's geography and planning structure limits sprawl, concentrates demand, and pushes prices higher in areas close to employment hubs. And while urban density has been promoted as a solution, delivery has been slow, with multiple build to rent and medium density projects delayed by financing challenges, planning appeals, and construction cost blowouts, meaning the supply relief that was supposed to ease rental pressure hasn't arrived at scale. And for Gen Z renters, that means fewer choices, higher competition, and a sense of instability that undermines long-term planning. And it's not just private housing that's part of the story. Canberra has also grappled with delays and debate around public and community housing expansion, modular housing trials, and innovative supply models that are often discussed as future solutions.
Could homes assembled like a Lego set solve Australia's housing crisis?
It's 55 weeks to build a home in the suburbs anywhere in Australia right now. So, we've got this real challenge around the time it takes to build housing conventionally. We're seeing from our members around 16 weeks to produce a home. And that's from signing a contract to having a set of keys handed over.
Modular homes are built super fast and as cheap as $100,000 for a granny flat, but only account for 8% of houses being built in Australia. The issue? Industry leaders say more tradies are needed, banks need to improve lending models, and admit the sector has an image problem.
People have that stigma or perception that it is that, cheap fibro shack or something from the 1950s or 1960s, and haven't actually seen the high quality architecturally designed homes that are being built now.
But take years to move from proposal to reality, leaving a gap between policy ambition and lived experience. And this gap is particularly visible to younger residents who follow these announcements closely, but don't see immediate change in their own housing options. And the frustration is compounded by migration and workforce dynamics unique to Canberra. Because as federal departments expand or restructure, demand for housing can spike suddenly, especially in certain income brackets, pushing up rents in a city with limited short-term supply elasticity. And while these changes may be positive for employment overall, they add pressure to a housing system that already struggles to accommodate new entrants, especially those without family support or existing assets. And this is where the Gen Z experience diverges sharply from previous generations.
The story of the housing affordability crisis is repeated across the country and also inside families. Let's compare two parents buying a house back in 2001 with their son and his partner trying to buy today. Each pair have typical jobs and earn typical incomes for their era. Each pair has been saving steadily for 6 years, and in today's dollars, the kids are way ahead. And yet, the parents have enough to get a typical 3-bedroom home in the suburbs, but their kids are still 4 years away from getting there. The social contract where a middle-class job yields a middle-class home has been left at the bottom of a house price mountain.
Because earlier cohorts often benefited from entering the market before prices detached from wages, or from family homes that appreciated dramatically, providing equity or intergenerational assistance. Whereas many Gen Z Canberrans are first-generation professionals without that buffer, navigating a market where even stability isn't enough. And this leads to a subtle but powerful shift in how the Aussie dream is perceived. It stops being a shared expectation and becomes a personal gamble, something you might achieve if everything goes right, rather than something you can plan for with confidence. And yet the story isn't entirely one of surrender, because alongside the frustration there are signs of adaptation. Some Gen Z buyers are targeting smaller units, townhouses, or newer suburbs further from the city center. Others are pooling resources with partners earlier, or relying on family guarantees and shared equity schemes that are expected to expand from 2026.
And it's little wonder that housing has become the dominant economic anxiety for a generation that is now hungry for a solution. But what does a solution actually look like? Well, suppose that we wanted to return things to the way they were. Pretty clearly, you can't bring the house price mountain back down to the wages hill without taking the housing market off a cliff. And that would unleash chaos even if it were possible, which, let's be very clear, it is not. Even these tiny blips that you see in the past were painful for many people who already had homes, with a broader chilling effect on the economy. There's a reason why housing crashes are often associated with recessions. Maybe instead, we could imagine more of a steady decline.
And there are policy conversations underway about lowering deposit barriers, adjusting lending frameworks for stable public sector workers, and accelerating medium density supply near transport corridors, all of which could reshape the landscape over time. But the key word there is time, because for many young Canberrans, the present reality still feels like a holding pattern, waiting for conditions to improve while watching costs climb. And that waiting has consequences, because it delays other life decisions, career moves, family planning, and long-term roots, which in turn affects how people feel about the city itself. And this is why the question, is the Aussie dream over in Canberra, resonates so strongly with Gen Z, not because the dream is dead in an absolute sense, but because it no longer feels guaranteed. And when a dream shifts from expectation to exception, people stop building their lives around it. And that cultural shift may be the most significant change of all, because Canberra has long relied on the idea that stability attracts and retains talent. But if younger workers no longer see a future where stability leads to security, the city's social contract begins to change. And that raises a bigger question for policymakers, employers, and residents alike. Can Canberra reinvent its version of the Aussie dream for a new generation? Or will Gen Z continue to quietly opt out, not in protest, but in pragmatism? And if you're a Canberra local, especially Gen Z, are you still chasing home ownership here? Or have you already adjusted your expectations? Let me know in the comments, because the future of the city may depend less on policy announcements and more on how an entire generation answers that question. What makes this shift in Canberra especially striking is that it isn't driven by economic collapse or mass unemployment, but by a slow erosion of confidence, because on paper, the ACT still looks like one of the strongest labor markets in the country. Unemployment remains low, full-time work is common, and graduate pathways into government roles are clearer than in most other cities. Yet despite that stability, Gen Z is finding that security no longer translates into progress, and that disconnect is reshaping how young people think about work, housing, and the future. Because when a stable income doesn't lead to a stable living situation, the promise that underpinned the city's identity starts to feel hollow. And this is where Canberra's housing structure becomes impossible to ignore. Because the city's planning model, built around compact town centers, green belts, and controlled expansion, has many strengths. But it also limits rapid supply growth, particularly at the lower early end of the market. And while density has increased over time, much of that density has come in the form of premium apartments or investor-focused developments, rather than genuinely affordable options for first-time buyers. And for Gen Z, this creates a sense that the market is not built for them, that new housing is technically being added, but not in a way that matches their incomes or life stage. And this perception is reinforced every time a new development is announced, with price points that immediately exclude early career earners, even those in relatively well-paid public service roles. And the psychological impact of that exclusion is significant, because it shifts the relationship people have with the city from one of belonging to one of temporary occupancy, where renting feels indefinite and roots feel conditional. And this is why many Gen Z Canberrans talk less about upgrading or settling down and more about keeping options open. Whether that means planning to move interstate, considering remote or hybrid work arrangements that allow them to live elsewhere, or simply delaying major commitments altogether. And this mindset is amplified by the visibility of alternatives, because Gen Z is the most digitally connected generation, constantly comparing housing outcomes across cities and even countries, seeing peers in regional centers or overseas achieving milestones that feel out of reach at home. And while those comparisons are not always fair, they shape expectations nonetheless. And in Canberra, the contrast can be particularly sharp, because the city's cost base is high relative to its size, and lifestyle trade-offs that might be acceptable in Sydney or Melbourne feel harder to justify in a smaller market with fewer perceived upsides. And this feeds into a broader reassessment of what success looks like, because when ownership feels unattainable, Gen Z increasingly values flexibility, travel, and career mobility over permanence, not necessarily by choice, but by adaptation. And this adaptation is rational in the face of uncertainty, but it also changes demand patterns, as fewer young people plan to stay long-term, reducing emotional investment in the local market, and weakening the traditional narrative of building a life step by step in one place. And Canberra's reliance on the public sector complicates this further, because while government work offers stability, it is also subject to political cycles, restructures, and hiring freezes, creating periods of uncertainty that can coincide with already tight housing conditions. And when departments expand rapidly, they can push demand higher without a corresponding increase in supply, while when they contract, they can leave workers feeling cautious about taking on long-term financial commitments. And Gen Z, having grown up through financial crises, pandemics, and cost of living shocks, is particularly sensitive to this kind of risk, often prioritizing liquidity and flexibility over leverage, which makes traditional homeownership models less attractive, especially in a high-priced market. And this cautious mindset is visible in survey data showing younger Australians are more debt-averse than previous generations at the same age. And while that caution is often framed as a cultural preference, it is just as much a response to structural conditions. Because when debt levels required to enter the market are extremely high relative to income, risk tolerance naturally declines. And this is where Canberra's affordability ratios play a critical role, because even modest homes require borrowing multiples that feel disproportionate to early career earnings, making the decision to buy feel less like a milestone and more like a gamble. And this perception is reinforced by the experience of renting, where frequent lease renewals, rent increases, and competition for properties create a sense of instability that undermines long-term planning. And while some policy responses are emerging, such as discussions around expanding build-to-rent, fast-tracking modular housing, and adjusting shared equity schemes to better suit younger buyers, these measures take time to implement and even longer to affect market conditions, meaning that for Gen Z currently in their 20s, the window of opportunity still feels distant, and this gap between policy intent and lived experience fuels skepticism. Because announcements without immediate impact can feel abstract when day-to-day costs keep rising. And this skepticism is compounded by the visibility of past promises that failed to deliver at scale, leading many young people to disengage emotionally from housing policy altogether, viewing it as something that happens above their heads, rather than something that will materially change their prospects. And this disengagement has cultural implications, because when a generation stops believing that the system will work for them, they adjust their behavior accordingly, investing less in long-term local ties and more in portable skills and experiences. And while this adaptability is often framed as resilience, it also represents a loss for cities like Canberra that depend on long-term residents to sustain communities, institutions, and civic life. And the risk is that the city becomes increasingly segmented, with established homeowners benefiting from asset appreciation, while younger renters circulate through the market without ever putting down roots, creating a two-speed housing system that mirrors broader inequalities. And this is why the question of whether the Aussie Dream is ending in Canberra resonates so strongly, because it captures a feeling rather than a statistic, a sense that the pathway once taken for granted has narrowed to the point where only a subset can realistically follow it. And while counterexamples still exist, and some Gen Z buyers do manage to enter the market through partnerships, family assistance, or strategic compromises, those stories increasingly feel like exceptions rather than norms. And when success stories are framed as lucky breaks rather than achievable plans, confidence erodes, and this erosion shapes how people talk about the future, often with a mix of humor and resignation that masks deeper concern. And yet, despite all of this, it would be inaccurate to say that Gen Z has completely given up, because beneath the frustration there is still engagement, still discussion, still a desire for solutions, whether that means advocating for more diverse housing types, supporting planning reform, or exploring alternative ownership models that break from the traditional detached house ideal. And this willingness to rethink the dream rather than abandon it entirely may be Canberra's opportunity. Because if the city can adapt its housing system to better align with how younger generations live and work, it may yet restore a sense of sick possibility, but doing so will require confronting uncomfortable truths about affordability, density, and distribution.
Of course, targeting house prices is not something governments try to do or even could do. In reality, they are shaped by interest rates, by migration, and by all sorts of things that we can't foresee. So what's the point of all these lines? Well, hopefully not to make us feel too helpless, but as a reminder that all of our policy debates about housing today are only likely to change the housing story over the long term. A housing problem that took a generation to create could take a generation or more to fix, unless our housing market makes a painfully sharp adjustment.
And it will require moving faster than the system historically has. Because Gen Z is not waiting passively, they are making decisions now. Decisions that will shape where they live, how they work, and whether they see Canberra as a long-term home or a temporary stop. And as those decisions accumulate, they will redefine the city's future in ways that no single policy can easily reverse. Which is why the conversation about the Aussie Dream in Canberra is ultimately about timing, about whether meaningful change arrives soon enough to retain the trust of a generation that has already learned to be skeptical. And if it doesn't, the quiet opting out we're seeing today may become the defining trend of tomorrow.